Ever hear operating expenses and think, okay, but what actually goes in that bucket? Let's break it down clean and simple, so you can look at any property and instantly know what's eating your cash flow. Operating expenses are the day-to-day costs to run a property. What it takes to keep the lights on and the place rent-ready. They do not include your mortgage, big renovations, or depreciation. Think of it like this. If rent stopped tomorrow, would this bill still show up? If yes, it's probably an operating expense. Bucket 1, the always show up costs. Property taxes, usually the biggest line item. They adjust and reassess. Plan for bumps. Insurance, hazard, liability, sometimes flood. Shop this yearly. Utilities you pay. Water, sewer, trash, and common area electric or gas. Property management. A percentage of collected rent or a flat fee. HOA or condo dues if applicable. Bucket 2, the keep it running costs. Repairs and maintenance. Leaky faucets. HVAC servicing. Roof patching. Landscaping and snow removal. Curb appeal matters. Cleaning and turnover between tenants. Pest control and security. Supplies and small tools. Bucket 3, the back office costs. Accounting and legal. Licenses, inspections, local fees. Advertising and leasing costs. Admin software or subscriptions. Now, what's not an operating expense? Mortgage payments, both principal and interest. That's debt service. Capital expenditures. Big non-recurring improvements like a new roof, full HVAC replacement, or major renovations. Those get budgeted separately as CapEx. Income taxes and depreciation. That's on your tax return, not your property's day-to-day. Tenant improvements for commercial leases, unless your lease says otherwise. Why does this matter? Net operating income, NOI, is your rental income minus operating expenses. NOI drives your property value, your loan terms, and your cash flow. Quick rules of thumb. For small residential, many investors use a 35% to 50% expense ratio. It's a starting point, not the finish line. Verify with actuals. Grab the T12 and compare to your pro forma, benchmark line items. If taxes or insurance look low, assume a reset after purchase. Easy wins to reduce expenses. Appeal property taxes when reassessed. Shop insurance annually. Raise deductibles if it fits your risk tolerance. Cut utility usage. LED swaps. Low-flow fixtures. Smart thermostats on common areas. Preventative maintenance beats emergency pricing. Lock in vendor contracts. And get 2 quotes. Audit your management agreement for junk fees. For commercial properties, learn the lease type. Gross. Owner pays most expenses. Triple net. NNN. Tenants reimburse taxes, insurance, and common area maintenance. Modified gross sits in between. Know who pays what before you underwrite. Pro tip. Set aside a CapEx reserve separate from operating expenses. Think roofs, parking lots, major systems. Bottom line, operating expenses are the heartbeat of a property. Categorize them, track them monthly, and compare against budget. Control your OpEx, control your NOI. Grow value one line item at a time.